Hello and welcome everyone to this week's Elite webinar. I'm Riz, and this is actually the last webinar of 2024 before we head into the full holiday swing. I know a lot of people are already kind of in that holiday Christmas type of mood and sentiment, which is great. Obviously, the market was a bit moody this week after sort of what happened with the Fed announcement on Wednesday. So let me provide a little bit of color on that for those of you not too familiar with what happened. I know some of you in Elite obviously have, for those paying attention to my lives, within the Discord server. But for those that missed it and those obviously watching after the fact here on this webinar, sorry, the recording on YouTube. What happened when Wednesday was the Fed cut rates here, 25 basis points as expected. Personally, I thought, based on the macro data, there was no need. The economy is still very strong. Unemployment is still, relatively low in check. We have payrolls that are good. Inflation, it was kind of the only thing that was upticking a bit as well, and that made it even less of a reason to cut at all. But hey, they decided to cut 25 basis points, and not only that, Powell said you really what dropped the market that day on Wednesday with that massive candle. This is a 3% drop here on the day, which is when I look back, it's one of the largest drops I think pretty much this year, if I'm not mistaken. I don't think there's been a 3% drop. Been close, but not exactly a 2.95 or something like that. Yeah, 2.95% drop like we had on Wednesday. So essentially, because Powell said that, yeah, they're cutting rate 25 basis points, they might actually, if necessary, again, if necessary, even be open to an increase, which is absurd. It's unheard of to cut rates, uh, and then to say we might increase if it's necessary. Well, then, okay, well then, we've already done a couple of rate cuts already. We've done that 50 basis point cut as well. It doesn't make any sense. Not only that, he also said that they're expecting, based on everything from the data standpoint that they're looking at now, they might be doing more than likely just two rate cuts next year. The market was expecting 3 to 4. So you can see that shift in expectation. And hence, because of what Powell said and that shift in expectation of how many rate cuts we get next year, that's where the market started pricing in this drop. So you can see this drop, 3% drop that day. Didn't even get to that 58.50 support level, previous support that I had here. You can see. And what happened was we had a little bit of a continuation on Thursday, and then Friday we actually opened lower. So it was looking like it was a clean break below the 58.50 support. Only for intraday, pre-market opened, it was, lower, and then market opened, and then it just went higher and higher throughout the day, and it recovered uh, substantially. It was actually quite a bit higher intraday, as you can see as I zoom in here on this wick, but eventually it settled up about 1.09% on the day, closing at 59.30. So above the 5,900 level once again, but still roughly now from the highs of, let's say, 61, roughly 6,100, still down 2.8% from that, right? Prior to Friday's complete recovery, if we had would have closed wherever the market opened on Friday, right, around 58.42, uh, that would have been about a 4% drop from the highs, right? But obviously that didn't materialize, so we closed around 2.8% from the highs. Okay. So some context there as to what's happening. And I think these support and resistance levels hopefully are helpful. Um, I added a little bit more I would say easier to read, hopefully, with the white color on the back, the black backdrop. And not to mention, I also added here for you guys the actual level that the white line is at, the support and resistance are at, okay? For easier viewing. All right, so that's the S&P 500. What happens this week? Usually, we're expecting because we don't have much of our earnings, release this week. We don't have really any notable macro events as well. We know that Wednesday, which is the 25th, markets are closed. We know that it's going to be a lower volume week. So I'm not expecting, based on Friday's close for the market to, blast off and hit resistance. I'm not expecting it to uh, more than likely, I doubt we're going to see a break below the support here as well. So more than likely, we could expect maybe a little bit of a consolidation here, right, as we head into the new year. Okay. Hopefully that sets the expectation for you guys. Moving on to the sectors. So one addition or two additions, I should say, to the sectors is I've added XLI and XLB, which is the industrial and materials sectors. Now, this encompasses all the sectors. Now, before I left those two out because I felt, you know what, they're not the most, let's say, important. I mean, all these sectors do play a part. Obviously, they're important because obviously they're constituents. They're part of the S&P 500 index. So, but I felt these were the two least important, and I wanted to keep the sectors to a minimum. But I'm like, if I'm including all these, might as well just include the other two as well. So that's why we have these industrial and materials as well. So XLI and XLB respectively. Okay. So communication, starting off with that, leading, of course, 35%. Everything you can see dropped from a sector standpoint. Everything, all the sectors did drop uh, Wednesday onwards, right? You could see that slump in all of them, and irrespective of what they are. But communication still remains the leader and looks like it will be the leader heading into the end of the year. Then we have XLY, which is the consumer discretionary, which is quite surprising considering it's actually above the pure tech sector, right? And it's of course above the financials, but financials have done really well heading into this year, the end of, I would say, halfway mark, right? So we got XLK and the S&P X or S&P 500 ETF, the overall index ETF, pretty much neck and neck. Both are pretty much together. Solid so far, 25%. If we close right here on the year, that's a solid 25% gain on the market this year alone, right? We have utilities and then XLI, which is industrial, very much neck and neck here, okay? And then XLP, which is the what is that? The consumer staples, right? Coming in at 9.75. Real estate, XLB, the materials, XLV, which is healthcare, and XLE, energy, all pretty much scrunched up here together, all underperforming. The Obviously these are the biggest underperformance, but one thing to note is XLV and XLE have both gone negative on the year slightly, right? So the healthcare and energy sector have gone negative on the year. So down negative 0.56% and negative 0.71% respectively. Okay. So that's something to keep in mind. Overall, it's been an extraordinary year for the markets, a bit overheated, overinflated, overvalued, in my opinion. But we do know that this can continue, especially this being the perfect storm with the Trump presidency coming in, with inflation coming down, with rates coming down, with the economy continuing to chug along, and pretty much everyone kind of expecting a soft landing and maybe no quote unquote recession. So this is one of the reasons why we've had a substantial year again right after last year. But 2025, all bets are off. It's kind of like a clean slate. I always look at the new year as a reset. Forget what happened last year. Forget what happened the year before, right? In a way, because the market's expectations, in a way, reset. Obviously, the worries and the catalyst still happen. There's always going to be new worries. There's always going to be new catalysts. But the market obviously likes to see the new year kind of be that theoretical reset. One thing I will mention is um, since we're looking at the sectors again, one sec. Just recently, uh, the government, the House and Congress, I believe, as a whole, both accepted the terms of the bipartisan bill, which is to provide, there's quite a few provisions in there, but that were accepted by both uh, Republicans and Democrats, and I believe it's now going to the desk of Joe Biden to sign off on. And essentially that averts a government shutdown. So that's also positive. I don't know how much the market will run on that news. The reason being, we don't want government shutdown because it adds another level of uncertainty. It adds a bit of a delay on effectively what the market might be pricing in, in terms of with the new presidency coming in on January 20th. And also, most importantly, it doesn't impact, or I would say it bypasses the potential impact to all federal government workers, right? So, for example, there'd be certain people that just wouldn't get their paychecks if there was a government shutdown heading into the holiday season, which is pretty brutal, right? It's pretty shitty. It really sucks, right? Like to think that could have happened. But I know Donald Trump and um, co-president Elon Musk um, wanted to effectively have a government shutdown if they didn't really get what they wanted. Um, but those that are in the House, in Congress, in Senate, they effectively were able to reach a compromise, right? So they didn't increase the debt ceiling, which I'm sure will be a point of contention in a couple years, but or sorry, they didn't freeze or remove the debt ceiling, but they did increase it by a bit. Okay, so I'm sure that's gonna happen. That talking point's gonna come up at some point. But coming back down to the commodities, we've got oil here consolidating just below 70 here again. Nothing surprising, nothing extraordinary. Just interesting to see here. And gold, right? Everyone's favorite, or I would say, shiny metal, is holding up pretty well. 2640, right? It looked like it would have been a bloodbath, which was for the October, middle of October to middle of November. But it's made a little bit of a recovery here, kind of settling in this 2640, 2600 area. Okay, so that's interesting to see, still elevated. Next, we have the asset classes here of bond yield. So interestingly so, take a look at even after Wednesday's decision here, where are we at? Right here, let me zoom in. Right here. So even after Wednesday's decision to cut rates by 25 basis points, you can see the market did, not the market, the bond market, the bond yields went up. The yields went up, the bond prices went down, but yields went up, and you can see they're still held even after the cut, right? So once again, pretty much the entire year and even part of last year has been a quite the reverse type of what you would expect, right? It's a divergence. If I can ever see one, this is the one right here, right? Markets, essentially saying the bond market specifically that they are expecting, you know, interest rates to stay higher for longer. And we've known that because, like, you could see that from September onwards, it just shifted where you could see that this was just coming down, right, leading into Q3, Q4, and then September onwards, because of what the Fed said, because of what the market's expecting from an inflation standpoint, they're expecting rates to stay higher than the norm, right? I genuinely believe that, you know, 1% interest rates environment is done for the foreseeable future. People do not realize that the last, prior to 2022, the the 10 years before that we had were unprecedented from a monetary policy because they were real interest rates were after inflation were like negative or next to zero, right? Close to. So you weren't really, if you factored in inflation and the reality was that you really weren't paying much to borrow, whether it was for a house, whether it was for a line of credit, or assuming the rates wasn't too high for you, but effectively, reasonable debt was had no I would say, relative cost. So it was cheap. That's what we call cheap debt, right? And it continued on for, I would say, close to maybe 15 years. I think post 2008 is where just it just changed. The the Fed and the central bankers, even globally, not just the Fed, because of that financial collapse, because of this this potential collapse and this they just got spooked. Everyone got spooked, and they just, I think, played the over very heavy-handed when it came to staying keeping rates lower, and everyone got used to it, and it's all got juiced. Whether it's the housing market, whether it's different equities markets, you name it, everything got juiced, right? Even crypto, like a lot of this is all speculation because people realize like money just means less to them, and that's why they'll spend it freely. They'll speculate with it freely, right? Because money is just effectively less valuable, and as a result, we've seen massive amounts of speculation increase ever since, especially since, crypto went more mainstream in 2018, and especially after 2020 when, the pandemic hit and everyone's kind of, I would say, minds shifted around what they want out of life, what they want to do with their life, and what they think they can make. I genuinely think that there's a generational shift around, especially like millennials and Gen Z onwards, into what they can afford. I think after COVID realized, wait a second, we actually may never be able to have the life of our parents, working a career job, working a job for 30, 40 years, and then retiring, maybe, dual income perhaps, but being able to have a nice, decent life, vacations, decent car, nice house, and a family. And I think Gen Z, millennials onwards have come to the realization that all those things are not a guarantee anymore. You can be educated, you can work hard, and you may not still be able to you might just barely be scraping by. You might not be able to afford the house, a decent house, not even the house of your dreams. You might not be able to, have a good cushion, right? So you got to scrounge and claw and scratch for everything. And so they kind of effectively just felt like they've been disenfranchised. They don't feel like they can get anywhere. So what do? Um, they check out. They check out of the system. So they work and they don't really care to provide or have any sense of accomplishment in society or their goals. And effectively, they're quietly just checked out. And as a result, we see that in again, I know this is going a bit off topic, but this is important to see these generational shifts. They start checking out of societal norms. So, for example, less people are having relationships, less people are getting married, less people are having kids. These are all shifts that we're seeing and have been seeing not just the last year or 2 years, but they've just been continuing in this direction more so year after year, right? And just take a look yourself if you don't believe me, um, or if you're not aware, right? There's a massive shift. Compare that to 20, 30 years ago, even 10, 15 years ago, right? Very big difference in people's outlook on life, on affordability, on kind of the fabric of life, if you really think about it, which is, having a family and settling down and having a good living and having future hopes and aspirations. I think for whatever reason, whether you want to pitch it all on the government or you want to pitch it on a certain generation or you want to collectively just, I don't know, blame everyone, it's whatever the case is, it's happening, and it's been happening for a few years now. Okay, so again, going back to track, we have the dollar index here. We have continuing US dollar strength compared to other major currencies, right? Slight little downtick on Thursday, Friday, but nothing to be concerned about because this thing is very strong. We're back to 2022 levels. I know this is doesn't seem like it because I'm so zoomed out. In reality, this is all of 2024 right here. So right, just moving right here. Let me move it here. There you go. All of 2024 right here. So for the year high, right? Not only that, but if you go back, because it's zoomed out here, you can see we're back to November 2022 levels in the US dollar strength, right? So quite extraordinary when you think about all the fear mongering, all those people, especially on social media, uh, morons, not even people, just morons, trying to claim the debt to the US dollar and BRICS is this and that, and everyone is taking over and US dollar is going to be nothing and the empire is done. And, you know, I was I would just roll my eyes at it, right? Because it's so cringe and it's so clickbaity and it's so stupid. And I get it because it gets clicks, it gets because it's like, holy shit, what's going on? Like BRICS are doing their own BRICS countries are doing their own currency settlements. Oh my God, like, Russia is trading in the rubles, which is fucking worth nothing. And oh my God, like Chinese economy and China is, trying to trade more and trying to get out of US debt and, trying to do their own thing. And you have like these other countries that are just not wanting to transact in the US dollar. You hear all this, but it's all half truths, right? It's all half truths. What you didn't realize was the US dollar is the still and was and will continue to remain, I mean, for this foreseeable future, probably well past our lifetimes, to be the reserve currency unless someone or some people collectively just completely fuck it up, which by in the times we live in, who the fuck knows? But I think, that's not going to change. And everyone was crying foul, but the US dollar transactions from a country trade standpoint was still majority, like over 55% of all trade transactions done globally. Remember, again, all countries, just assuming all countries, was like US dollars. And then the remainder 45, 50% was like, maybe 5% is done in like euros or 10% of that is done in euros and like, another uh 2 or 5% in the Indian rupee or something. So like it was nothing, if you compare the US compared to the individual currencies of the other countries, they don't hold a candle. So it just blew my mind that that's what was going on. But that's the US dollar index. Again, like I said, no earnings and no macro events to keep an eye on this week, really. So shifting back to the SPX here, if you guys have questions, I'd love to answer them or go over anything. This is a pretty muted week. I'm not too, I would say, enthralled to look into taking major long or short position this week. Obviously, like I said, we're assuming a lower volume. I'm not expecting like, anything to happen, but I'm not expecting the market to do major moves, right? Especially with the shortened week. Most of Wall Street just essentially having the snooze button on and just kind of either being away from their desk or looking with one eye open, right? So I think until the new year, we're just going to coast along. But with that said, we got a question here from Abhishek. PG sitting on the 200-day moving average is, yeah, okay. Obviously, something we are well aware of. This is great. I know we've looked at Procter and Gamble over the past few weeks, and it always felt like, okay, not yet, not yet. And I'm glad that we waited because it's right, like you said, at that 200-day moving average, looking very strong, right in between that 200-day moving average and 50-day moving average. Um, Again, this has been a good performer from a stock performance. Obviously, it's Procter and Gamble, solid, great company. You get a little bit of a dividend as well. 2.3% annualized dividend yield. So this is interesting, right? Again, like I said, I'm not personally looking to do any major entries. We do have our positions, long positions open. I am predominantly still in, let's say 75% cash now. Um, and with a couple of shorts open, obviously the shorts that I have open are not on like solid large caps. Uh, and this is looking good. And then again, J&J as well. Uh, this has also gone well below that support of that 144 area. Well, right. right at it now, but it did dip there after Friday's potential move lower in the market. But this is a very nice setup as well. This is great to carry. It's fine. Uh, I'm not worried. This is also a solid company with a 3.4, roughly 3.4% dividend yield. So, nothing to worry about. We've seen these moves play out where the pendulum swings, right? There's points in time where you could see that, okay, J&J, kind of hitting against this area triple top, and then that's where like, okay, maybe you don't just bag hold it. Maybe you get out. It's had a nice run, right? July on to September. And then you wait, right? So when you see these periods of oversold, when you see periods of the pendulum swinging to the bearish side, and these types of stocks, remember, it's not just J&J. A lot of healthcare it is down, right? And J&J is kind of one of those pharmaceuticals, but also a bit of consumer staples, right? Like they're pretty diversified as well. So I wouldn't say this is a pure play pharmaceutical healthcare, but I would say that's what it fits into. But we've seen that predominantly the entire sector is oversold or out of favor. And that's okay because we've seen the pendulum swing the other way as well. It's just a matter of time. Like I said in a couple of webinars before this, I said once the once there's some sector rotation actually kicks in, once we actually see some clarity around what's going on with the incoming administration and RFK Jr. and all those people in charge in the Trump cabinet, assuming they all get approved, what happens and what they do, are they actually going to be able to make a difference? And are their policies going to actually be a net negative to these companies? Who knows? I would wager it's more, I would say fear. I think it's more uncertainty. I don't think there's going to be able to change much. Like, you don't just come in and then completely shift the entire system at the core in roughly 4 years. I just don't think it happens, sadly, right? So that's why you're seeing a lot of healthcare uncertainty post November 5th, right? So you have November 5th right here, right? So a lot of healthcare has gone lower, and this is not just a J&J problem or a Procter and Gamble problem or any other pharmaceutical, right? So it's something to keep an eye on. I consider J&J and P&G to be a bit more consumer staple, but obviously they could obviously fit into healthcare, right? Let's see, there we go, right? So they could fit into healthcare as well. You got MRK that's down, you got SNY, Sanofi, you got GlaxoSmithKline, you got UNH, obviously, which is obviously the big headline newsmaker, the healthcare insurance side of things. But again, a lot of healthcare has smoked. Really, that's the best way I can describe it, right? Another question, UPS. This is another one that just kind of languished, um, not very bullish, not very confidence inspiring, as you can see. Look at that. Like it's kind of crazy to see how it gets so close to the 200-day moving average, right? And then pukes. Again, not precise. None of this is all ever going to be precise, but take a look at that, right? Let me circle it for you to give you guys an idea, right? Right, you guys seen that? Right. So it's so neat or interesting to see that. Obviously, it just doesn't always play out like that. Uh, quite rarely, in fact. But that right there is interesting to see. I would not personally feel comfortable with an entry on this yet, especially not in the last week and a bit of 2024. Uh, yeah, Friday was a bit bullish, but that doesn't mean much. We got it right here at 125, which is, if you look at it, 2020 area, right? This is that gap there in 2020. We're looking at summer 2020, July 2020 levels. It's erased 4.5 years, or left roughly 3.5 years, of gains. So just something to be aware of. Okay, I don't like to go this far back to to use as a setup, but it is important to have some context where it's at. Very oversold, obviously out of favor. Um, yeah, I think it's better to just wait. I think if you have a position, it's fine to carry. You got what? You got like a 5% dividend yield roughly. Um, yeah, it's not going anywhere. It's just obviously seeing quite a bit of a disruption in its business due to Amazon. Like I've said before, when talking about UPS and FedEx, Amazon kind of really squeezing these companies, which was very much reliant on for its logistics, right? And then it's just started taking a piece of their own pie with its own logistics side of things, right? So Amazon has its own courier stuff, and um, that doesn't mean, these UPS and FedEx are just going to zero or going to be useless. It just means that yeah, it wasn't as lucrative of a situation. Um, as you saw back in the post-pandemic years, right? Until Amazon really started clawing away at that side of things. Okay. Um, any other last final questions before we wrap up the last final session, Elite webinar for 2024? I can seldom believe it. If you ask me, it's all been a blur. 2024 has been a blur, uh, uh, with ups and downs, of course, just like everyone else. But hey, so be it. Time waits for no man or woman. And hopefully, you guys have had an extraordinary year. I once again want to thank everyone for being a part of Elite, for being in the community, for participating, for being a wonderful addition to the community and for being there for each other, for having the accountability, for investing in yourself, in your future, and looking to continually improve and grow and be the best you can, not from just a trading standpoint. Remember, trading is just one piece of the puzzle. Obviously, it's your main focus, but it's just one piece of the puzzle. Thank you, Axel. I appreciate that in the chat. It's extraordinary how as I've gotten older, as I've gone through life, how many things intersect, whether it's your trading and your financial goals, your personal finances, and your dreams and ambitions, and what you want to achieve in life, and your family. All that is connected to money, your health, your finances, and thus your trading. So it it comes full circle. Honestly, it comes full circle. All of it matters. And I think if 2025 is going to be an eventful year, we know no one knows how it's going to go, but what we do know it's going to be quite the eventful year. And I can say that based on historical experience, right? Remember, you know the saying, history doesn't repeat itself exactly, but it often rhymes, right? So, uh, with that said, I wish everyone a Merry Christmas, Happy Holidays, Happy New Year. You know, rest up, take it easy, really, really take stock of your life, your blessings, the pros, the cons, all the things that have occurred. Maybe do like an internal audit of kind of all the major things that have happened in your life this year, the good and the bad. Maybe note down some of your, if you haven't already, I know many of you have in Elite, but some of you that haven't, even those of you that are watching after the fact, the replay recording, the goals, see what goals you had, or if you didn't, set new goals, realistic, attainable ones, of course, um, for the new year, right? It's important to have a direction. There's far too many people, I think, like I was saying earlier, now than ever before, who feel helpless financially, even outside of financially. There's people that are very lonely. There's genuinely a loneliness, isolationary epidemic. And I don't think anyone wants to acknowledge that. I don't think they will because it's hard to quantify it, right? You can't quantify loneliness directly. So uh and it's so individualistic, but I think people are looking for hope. People are looking for a community. People are looking for direction. And obviously no one can do that for you completely, but they can guide you. They can help you. There is strength in numbers and solitude and being there for each other, especially those with like-minded people, right? Everyone knows you can be amongst people that just you don't gel with, or you don't see eye to eye with, or you don't have anything in common, and you just might even feel more lonely. But being with people that you resonate with, that you see eye to eye with, that have the same goals and want to be better and grow together, there's there's nothing like it. Honestly, there's nothing like it. If you would have asked me when I created the Elite membership back in the start of, really, I created in 2017 to just, obviously there was a setup page involved and all that, but really I launched it in 2018, January 2018 when I launched it officially, and we started with like just a handful, like you count on your hand, right? Members. And it's extraordinary. If you would have told me what it would have turned into, what it's turned into, what it would mean, what it would mean to me, and of course others in the community, I would have been like, I don't know about that, man. I don't know. But here we are, right? It's extraordinary, and obviously we will continue on this mission on this path to empower others like yourself, empower more people, reach more people, help more people, and of course learn and have fun in the process as well. I think that's important. So again, I love you all. Thank you so much. Thank you for a great year. Um, just like you, not it's all ups and downs. I don't want you to think, oh, Riz, it's another fantastic year for you. No, it's great. Again, good and bad. Different aspects of life. I'm human just like you. I bleed just the same. I lose money, um, and I make money just like you guys. So, we're in the trenches, literally, so to speak, together. So, do not lose hope. Keep pushing. I am here for you. If you need anything, feel free to reach out. Again, have a fantastic holidays, rest up, recuperate, and we will be back in the new year stronger than ever. Take care. Ciao.